Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using that 74 to 75 area as a bull-bear idea, and the idea was that if ES holds above 74 to 75 and continues to push through 83, then we could get some upside, and if we failed at 83 and then failed at 74 to 75, it would open the door for a test of this 1850 area that we had, which is pretty decent support. So heading into the open, we're going to be watching how the market reacts to 49 to 51.75. That is bigger picture support that we're testing at this point, and responsive buyers have been active on first test, and this is really going to be an important zone heading into the open. If we hold 49 to 51, then on the upside we could see a move back up towards 61.5 to 62.5 and 64, 66, potentially back into that prior range. Above 64, 66. And if we start holding and stabilizing above 64, 66, then that would tell us that buyers are actually re-entering and being active at that level. On the other hand, if we just slice through that initial support zone, that would be indicative of a pretty big picture shift to the downside. Then we can go lower into 43.75 to 45.75. The 38 to 40, and those areas can still attract buyers on first test, because typically when we're testing a big support such as this 49 to 51, even if we break below it, usually we don't just leave it untested after that. Usually even when we break through such a decent support zone, we'll attract buyers at the support zones below and then come back up for a retest. So even in the event that 49 doesn't hold and we head lower, we can still find buyers at like 38 to 40, 33.75, 35 quarter. Those are some important support zones below, and then return back up for a retest of the 49 to 51 area. So in that case, the 49.51 would serve as a upside target if buyers are entering at the support zones below, and then the markets can still technically balance between those lower support zones and a move back up towards 49 to 51 and 61, 62, 64, 66. But we know that bigger picture, the markets are quite extended to the downside, so we just have to be a bit careful on entering short positions at really aggressive prices. It doesn't mean that shorts are not going to work, or we're not going to head lower. We certainly can, but the main idea is that at this point we are pretty extended to the downside, so you just want to be careful with it, because we could see a better buy response here and see a move back up into the prior day's range. If we do start holding back up at the prior day's range above 64, then 69 to 71 is the start of that breakdown to the downside, and 74 to 76 is an important resistance area, which could definitely attract sellers on first test. So at this point, because of this weakness in the short term and on the larger time frames, we've been selling off. Any moves back into resistance can still attract sellers, and we can still get short setups at some of these prices, or on any bounce really back up into resistance. And if 49 goes, then intraday we know we're bearish, and we could be looking at a extended move down into 38 to 40, 33.75, 35 quarter, and at that point we can consider longs. But if 49 breaks with any kind of conviction, then we do need to be careful on long setups, right? So we're not going to be trading long at every support on the way down. We'll intraday focus on the short side down into 38 to 40, 33.75, 35 quarter. But then once we get really extended, at that point you could see some better bounces back up towards support, this broken support, which can then act as resistance and then even higher. So this 49 to 51 is really going to be important off the open. All the markets are pulling back, and TF is still actually holding above the recent lows. So the way this market is set up, today is going to be important, because if buyers don't really show up today, then there could be a much larger time frame shift that could be in place. So today is really critical for the buy side, and for that reason we just want to be careful on shorting at very aggressive prices, because we could see some better buy responses coming into the market, and we just want to make sure that we're aware of the overall context and the fact that we are quite extended on the downside, and even though we're short-term bearish, the downside could be limited, especially if 49 to 51 holds. That's a very key support idea. So those are the main ideas heading into the open. Let's see how well initial support holds. That'll give us a good idea off the open. And then on the upside, the 61.5, 62.5, 64, 66 is really a key resistance. And we will take it from there.